An agreement is another indispensable thing every company in the system must have. At any moment of time, every customer and vendor must have one valid agreement for each allowed traffic direction. It may be just the customer or the vendor agreement, or a bilateral agreement covering both traffic directions. If we look at the agreement terms, we'll see that they start with an agreement code, which is just a reference number you assign to an agreement. Then you need to specify the allowed traffic directions, incoming or outgoing. Please note that it is not possible to edit the traffic directions for an agreement that has already been saved. Then you need to specify the start and end dates for the agreement. By default, the end date is assigned to the 1st of January of the year of 2100. And the company registered name, which is the official name of the partner company that you can use in formal documents like invoices. Optionally, you can also specify the bank info of the partner. Then, we have two similar groups of parameters. One starts with the word in, which means the customer side. The other starts with the word out, which means the vendor side. First of all, it is possible to specify the time zones for the customer and the vendor side of the agreement. It is important for the system to know the time zone when, for example, creating an invoice for the customer, because it is possible, knowing the time zone, to adjust the time frame to create the invoice for, so that the system will always be creating invoices according to the partner time zone. The same goes for vendors, because the system also creates invoices for vendors. Of course, we do not send them out, but it's still good to have them in the system for the amount cross-checking purposes. In credit and out credit stand for the customer and vendor credit limits. The possible values of the credit limit are the following. Empty means unlimited, so this is a fully post-paid customer and the credit control is disabled for it. 0 means fully prepaid, no credit at all, so that the credit control system will stop processing new messages from that client as soon as the balance becomes negative. Or otherwise, you can put a value like 1000 USD, for example, which will give a 1000 USD credit to that customer. The billing period tells the system how frequently it needs to create invoices for the customer and for the vendor sides. And the payment period helps the system track overdue invoices so that it will be able to change the status of an invoice as soon as it becomes overdue. And then it will become quite easy for you to track such invoices in the invoicing interface. The increase period is very helpful when it comes to processing vendor rate sheets, for example. When a partner sends you a rate sheet that contains some rate increases, and those increases have effective dates closer than 7 days in advance, the system will let you know prior to applying these rates so that you have the chance to reject that file because of the violation of the contract terms. Optionally, it is also possible to stipulate a similar notification period for other rate change types like decrease or new, for example. Tax rate is the percentage of the tax that the system can calculate, and you can use that in the invoices, for example, if you want to. The payment alert is the parameter that defines whether or not the system will be sending out a notification to the partner every time somebody registers a payment to or from that company in the system. That's like a payment confirmation. And then we have a bunch of different default email addresses, one for the invoices, one for rate updates, one for automated technical alerts the monitoring system can generate, and one for account-related alerts like credit usage alert or low balance alert. And the last one is the balance limit. This is a supplementary field that works together with the credit limit, and this is the way it works. The billing and calculation of traffic charges is based on EDR files, event detail record files, that the billing module collects from the switch every minute. But in case of a very heavy traffic from a customer, it may happen that during that minute between the actual service consumption, when messages from the customer hit your switch, and the moment when the billing module learns about that and decreases the customer balance accordingly, the customer may use quite a bit of your service so that they will run out of credit and go below their credit limit. If you want to have sort of an insurance against that, you can use this balance limit. So for example, if the customer has a 1000 USD credit limit, you can assign the balance limit to 950 USD so that when the system discovers that the balance is below this value, it will stop accepting new messages from that client. And next minute, it will receive some extra billing records from the switch. And when it bills them, it may happen that the customer, during that minute, has used some extra service from you so that the balance gets very close to the credit limit, but not beyond it. So once again, this is an optional parameter that you are recommended to use with partners with whom you want to make all possible precautions against letting them run out of credit.